Hello, everybody, and welcome to the last trade of September because I will be traveling and won't be able to make these videos for the rest of the month. So, this is our last trade for the month of September. I will be back in October. So, let's take a look at the market like we always do and bounce around and look for something to trade. So, here we are. This is the S&P 500, and you can see it's been on a bit of a roller coaster the last month or so. It's been down for a while, then it went up again, then it came down. So, it's been bouncing around. And volatility, as you can see, has spiked a little bit over the last few days. So yes, this is the S&P 500, and you can see the volatility rank is 5. So if we go to Q, the NASDAQ, similar looking chart as always. It's always pretty close usually to S&P 500. Same scenario, down, up, down. And again, volatility has spiked a little bit over the last few days. And this rank is also 5. And now we'll go to the Russell, which is the small caps, and this one you can see looks a little different. It's been a bit more extreme, right? It went down, it went up, but now it went pretty far down, almost back to where it was, let's say, a month ago. And this volatility looks much higher, at least bounce-wise, than it did the other one. And it is a little bit. It's at 7. And since I always like to have trades on in the indices, because this index has the highest volatility and also seems to be kind of bottoming out a lot more than the other two, what we're going to do is we're going to do an iron condor in this one and also skew it slightly to the upside. And what that means is we're going to put the put side of the iron condor slightly closer to the call side with the assumption that, yes, this may continue down, but hopefully over the next 45-ish days it kind of stays around this neighborhood. So that's our assumption going in. So if we go to the trade page, we're going to go as close to 45 days as possible. This will be 46 tomorrow, so that's perfect. The price is essentially at 184. I've already set this up for us to save us time. And now you'll see what I mean by slightly skewed to the upside. If we just say for nice easy use of numbers that this is 184, we're going to sell a put that's $9 away on the put side on the bottom. And you can see on the call side we're selling it $10 away. So what I'm doing is I'm leaving more room to the upside. Again, my assumption is that it's closer to the bottom. Purely an assumption. Nobody knows the future, but that's just the assumption I'm going to make. So I'm going to put the put side slightly closer by $1 than the call side, leaving it more room to go up than down. And hopefully over the next 46 days, this bounces around but starts to kind of slowly kind of bounce its way upwards, let's say. And then, of course, we're going to buy the call and the put $2 away to create a $2 wired iron condor. And as long as we're collecting at least 66 cents or more for this trade, which we are, this is our trade. So, assuming everything stays the same tomorrow, IWM opens at 184. We're going to go $9 away on the put side, $10 away on the call side, create a $2 wide iron condor, and if we're collecting 66 cents or more, this is good. If not, we start moving sides closer. So, if we think it's going to go up, better chance of going up, then we'll move this closer. When I mean closer, I'd say this would go to 176 and 174. If we think it's going to come down more, we would move this down. We'd go from 194 to 193, and this would become 195. That's what I mean by closer and tighter. So that's how you skew an iron condor. That is our trade in IWM for tomorrow, and again, our last trade for the month of September. See you all in October. Happy trading. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is, to me, the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.